Okay, so trading end of year seasonal patterns with options and sector ETFs. This is a presentation I do once a year around the same time because, as I always put out, October through April is the most profitable time to trade with most reliable trends, and it usually something we can and should capitalize on if at all possible. Do this disclaimer really quick. Everything we're going to be going over today is for educational purposes only. We're not giving any specific trading advice. What we'll be showing is how myself and Becky, how we go about profiting from the markets and the process we use. All right. But not giving any particular advice on what to trade or how to trade it. Okay, so seasonally, some people are familiar with seasonal patterns, but the most prolific one in the stock market is the end of year, where there tends to be a bullish bias. So it's a matter of when to best capitalize on that, or to recognize it and capitalize on it. So that's what we're going to take a look at this afternoon. Got a few more people coming in the room. Give them a minute to get here. They're coming right now. A few seconds. I know there's one person who's been specifically waiting for this presentation for a while. So, all right. So these are the sectors we trade with ETFs and options. It gives you a pretty good diverse trading type portfolio. So one thing might be going against you while one thing is going in your favor. So there's always something going on in different sectors. They do not all move in the same direction at the same time. So with the different strategies we have, you might be long energy and short the Dow, so to speak, or that type of thing. So, and gold might be going completely different than oil, which might be going different than Germany, which might be going completely different than the healthcare sector. So by having a good diverse list, this list is good for not just diversity, but it has enough option open interests and volume to trade what we want to trade effectively. There are lots and lots of ETFs, but many of them that have options don't have enough option volume and open interest to be able to trade effectively, to be able to get in and out of positions. But this gives us the ability to do that. And if you are a small dollar trader or a big dollar trader, there are enough options here to satisfy your needs and account size. All right. What we're going to look at today, this is a chart from Jake Bernstein's Seasonal Trader. Okay. And it's a seasonal chart of the S&P. And what this shows us is that from October through the first part of December, there's a very definitive bullish bias in the markets up to 70-something% of the time. This is a composite chart of the last 38 years approximately, from about 40 years worth of data, about 39 years, from 1983 to 2021. So about 38 years worth of data. And this is a composite chart. So how I use this most often is this part of the year, which is a very definitive bias to the upside. So as John Carter would say, you keep your powder dry and wait for the right time to take your shot. This is a time of year when it's the right time to take your shot as soon as we get a buy signal. We have a very good chance of having some nice, very profitable trades with bigger trends, taking long trades this time of year once you have a valid buy signal. And we use our strategies to produce the buy signals. Okay. So, and that is this trend right here, going into from October through December. What I'm going to do right now is take a look at the big picture monthly chart of the S&P, where we are right now relative to predominant trends. And then we'll come back to this and then take a look at a smaller time frame to see how this chart actually ties into what's actually been really happening and how we can use seasonal patterns to make trading decisions throughout the year. When we have a choice of going long or going short, if we have a buy signal and a sell signal, which should we take? Because you're going to get buys and sells all the time, but which gives us our best opportunity at a certain time of year based upon historical patterns, not just our stats, but obviously we have a much better opportunity of taking a long trade and having it do well for us here. Just like in September, we have a better opportunity of taking a short trade at the beginning of the month and having it do well for us, or a long trade at the end of August and having it do well for us. So that's how we kind of use the seasonal chart patterns to help us with our decision making to make choices. Okay, so I'm going to switch over to a monthly chart and then we'll take a look at that. Along the way, if you have any questions, go ahead and don't raise your hand, just either unmute and ask a question or type it in the chat window and I will see it there. Once again, Control V. In the chat window, you'll see the link to the handouts. Handouts are on the page on the chat window. So you can go to that website and download the handouts and other information that I put on there, historical trades and other things, webinars. Okay. So what you're seeing right now is a monthly chart of the S&P 500 SPY. Right back here, we're at 1998. This is 1998 monthly chart of the S&P. This blue line is a monthly 40-period moving average, a simple moving average of 40 months. Okay, this is a monthly. They can be daily, weekly, whatever, all different time frames. This is a monthly chart. Every candle is 1 month of time. So this is a monthly moving average of the S&P 500. So you can see going the end of the 1999 into 2000, we have a very bullish market with the S&P. And then came this 2001 type pullback, and they call it a crash, the bubble bursting. You've heard different things about the .coms, but when we close below this monthly 40 and we get 2 consecutive closes below the monthly 40, there tends to be a deeper pullback. So this was that .com crash through 2001 into 2002, and it was a pretty good size pullback. Okay, and then we came off that rally, we rallied back, and we're back up above the 40, and this was in 2003. And this continued, stayed above the 40. People ask me why I used the 40. Started using the 40-period moving average and multiple time frames. You'll see it on pretty much all of our charts. From learning from Oliver Velez. He's someone we met at the Traders Expo in Las Vegas, and we started following him. And he used this in all the charts, and it became a staple in our charts also as an indicator of trend. And so that's what we use it for. It's a line in the sand. Above is bullish, below is bearish. Trend, if it's increasing, it's bullish. Market is bullish. If it's decreasing, market is bearish. So we use that as part of in most of our trading strategies as a trend indicator. And it is involved in some of the decision making as part of the criteria in many of our trading plans. All right, so big monthly uptrend. This goes on for several years. And then, of course, we had this 2008 debacle when the market crashed. Financial markets got crushed, 2 consecutive closes below, and a continued move down. And this took us right through 2009 when we started to rally back up again, and we're back above the 40. And then we have not stayed below the 40 for more than 1 month, or just a couple of weeks ever since then. So we go regular market pattern. Every one of these is 1 month. So every year or 2, we get a pullback to the uptrending 40. So rally, 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 pullback. During this time, the people in the news media, they'll be telling you the market's going to get crushed. We're going to have a repeat of 2008. It's happening all again. It's coming down. No, we pull back to support and we bounce right back up above the 40 a couple of weeks later. But they will try to panic you and tell you the sky is falling type stuff, and everything's going to because they tend to live in the moment. Okay, back above the 40, massive rally continuing on to 2012, 2013. Here we are in 2015. We got to pull back to the uptrending 40, massive uptrend. Okay, touch down here, right back up. We never even closed the month below the 40. But when it's pulling back, it gets scary. Once again, they'll try to panic you and they'll tell you, well, the market pulled back 10%. It's now in a bear market. They will literally tell you that every single time, because whoever is writing the copy for the people, for the talking heads on all the news shows, that's just what the standard things they say. Oh, 10%, we're now in a bear market. They will literally tell you that. It pulled back 10%, we're in a bear market now. And then a week later, they won't even talk about that again a week later or 2 weeks later, because it's not, okay? So don't be afraid when they tell you, oh, recession, oh, this, oh, that. That's why we look at the charts objectively, not and some one person's opinion on some talk show means nothing, okay? There's a reason they're on those shows, and it's usually not for the benefit of the public. It's usually they have a product or services they want to sell a market, and that's why they want a talk show, okay? Or they're being paid. All right, so massive rally is continuing. Here we are in 2018. And once again, pull back, several month pull back to the uptrending 40, takes off again. All right. Here we are, COVID. The COVID shutdown at the beginning of 2020. This pullback lasted about 3 weeks. Pullback lasted about 3 weeks. It was strong, it was intense, it was gap after gap. It was some of our most profitable trading ever with put options. And it was great trading for us because we were taking our trade signals, and it was just gap after gap after gap. First targets, we were hitting 60-70% return at our first profit objectives, where we would normally be getting 10 to 15, 20%. It was just great trading. And then massive, one of the biggest rallies ever, right back up. This is all during COVID, okay? It doesn't matter what's going on in the world. There's always going to be some turmoil. There's always going to be a war. There's always going to be regime changes. There's always going to be elections. There's always going to be something with oil or something with gas or something with something going on in the world that creates any. It doesn't matter. Whatever's happening in the world will create. This month we'll have an open, high, low, and close. And when we look at it in this bigger picture, and not the day-to-day noise, you realize things move in a fairly orderly way if you take away the noise. And the way to take away the noise is take a look at the big picture. Day-to-day, it might be going crazy, but when you pull back and look at it, hey, pretty cool. So if you're a long-term investor, here is where you're setting up your positions. When you see that pull back towards the 40, anywhere down here, you start setting up your long-term positions. If you're a long-term investor. If you're a long-term investor, any of these pullbacks, you establish your positions for long-term investor. If you're a long-term investor, anytime getting down to the 40 is when you set up your positions for the massive uptrend, is when you set up your positions for long-term. So if you're a swing trader, we'll be looking at trades on the daily chart, but if you're a long-term investor, this is your best opportunity, is when it pulls back to the uptrending 40. Okay, here we are in 2022. It pulled back to the 40, closed once below, right back above. But any time it was I talked about this multiple times last year during the meetups, this was a time to establish positions if you're a long-term investor, anywhere around the 40 as it pulls back, okay? And if you did that, you'd be quite happy right now. Especially if you were taking profits along the way and using stops also. But this is where you put in your long-term positions, right, as it pulls back. And here we are right now. This is the S&P right now. And here's the 40, and we go into a pullback. So for those of you who are familiar with Fibonacci type stuff, I'll throw a Fibonacci retracement on there just for fun. This would be a 50% pullback from this last big swing. This is a monthly chart now, and here's 61. This is the uptrending 40. This is going to meet somewhere around here. A 50% pullback from these lows is pretty normal. So I would expect the S&P to maybe pull back a little bit more, at least to 50%, as this is going. This will keep going up, and they're going to meet in the middle somewhere. Okay, so it's just perfectly aligned for a pullback and another end of year. So as we pull back, it's going to hit this uptrend, and we're going to probably get this nice rally toward the end of the year. That's in line with that seasonal pattern for a long. Pulls back. Okay, I'm going to pull up the NASDAQ. That's the S&P. Let's pull up the NASDAQ, see how the NASDAQ looks. Here's the Qs, the NASDAQ, similar thing. We saw last couple of weeks, we're seeing a pullback. Okay, this is October so far. This is September, this is October, and we're seeing a pullback, and we'll probably see, at least as this is going up and this is coming down, they're going to meet in the middle, and then we see the next rally off of that uptrend. Take a look at the Dow, DIA. Getting even closer. Okay, so Dow is even closer to that 40. Once again, this is about 600-700 points away from, as this is going up, we're looking at about between 500 and 700 points lower until we hit that point where we expect a bounce. And that lines up with the end of year type of seasonal pattern. All right. Remember, any questions you have, stop me, ask me, type in the chat window, or just unmute and ask it. Okay, so I'm going to change this to a daily chart, and let me use an example. Then I'm going to switch back to the composite chart for a moment. You share options. Okay. If you ever want to see how well these things actually work, and well, you have to take a look at what's been going on in, I've said it several times this year, the market is doing everything we expect at the time we expect it to. I'm not shocked by anything that's happened in the market this year. I'm not shocked when it's bullish. I'm not shocked when it's bearish, because I expect it. It's normal and expected. Okay. This bearish move in September. Okay. And at the end of August, we see this bullish move, the seasonal pattern where we see a bullish move at the end of August and a bearish move through September. I'm going to switch back to the chart of the S&P. Remember, bearish through September, bullish at the end of August. So as I switch back to the chart of the daily chart now. Okay, here is September. This is this year, September. Bearish through September, bullish through the end of August. For those of you already familiar with our trading strategies, I might be up here at the end of August, beginning of September, and I might get a buy signal on one thing and a sell signal. Which one would I, if I have to make a choice what to take, it would be smarter to take the sell signal, because it's in line with a major seasonal pattern where the market tends to go bearish in September. So when I can't take every possible trade. There are too many potential trades. We get 20 to 40 something possible trades every month with the different strategies we use. So we have to pick and choose what the best one is, and given the information we have available. So when we utilize seasonality in conjunction with the trade signals, and we have to pick and choose which one we want to trade, because we only have so much money and to allocate. Not everyone has huge 6-7 figure accounts, okay? Some people might have a $5, $10, $15, $20,000 account. You can't trade everything. So you have to pick and choose. So you pick and choose the ones that's smartest, the ones that are also in line with the seasonality, okay? So if I see a short signal anywhere up here at the beginning of at the beginning of September, that's a trade I want to take, okay? If I see a buy signal come up valid on our trade signals towards the end of August, I'm going to take that buy signal because we tend to have a bullish move at the end of August, okay? So those of you who have done what any kind of webinars with or in-person training with Jake Bernstein, you've heard him talk about seasonal patterns. This is how we have taken that information from Jake and we use it in conjunction with our regular trading of options and ETFs. It gives us an extra data point that actually helps our profitability. And I'll show you how that's even amplified in a little bit. I'm going to show, let's take a, we're going to go back to the handout briefly. Yeah. And let's go to earlier. This is May, June, July. May, June, July has an overall bullish bias. It's may not be as clear cut straight up, but you can see June tends to be more sideways, bearish in the second half. But generally speaking, from May to July, it tends to be upward, and then it goes sideways, and then a bullish move. So there tends to be an upward move. So when we see our trade signals getting buy signals in that May-June timeframe, those are potentially good trades to take on the long side rather than taking short trades. Okay, I gotta hang on a second. Okay, I just got a request. If anyone wants a copy of the composite charts of these, message me, email me or message me later on. And if you go to, close out a request for that, just 1 second. I'm going to, in the chat window where you see the link for the handouts, go to my website, use the contact us page, and email me what you would like to get. If you want to get the composite charts, I will send those to you, a copy of those, and also which ones, because we have different indices and some different commodities also. So which sectors, and then so I can send, if you just want major indices, we basically have the S&P, we might have the Dow also, but S&P definitely, gold, a few others. And or if you have my email directly, just email me directly later on and I'll send it to you. Okay, so May through June, overall bullish bias. So let's take a look at what happened this year, May through June. I'll go back to the daily chart. May through June. This is what the market looked like May through June. Bullish, 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 bullish. And we got our buy, so when we get buy signals in this time frame, April, May time frame, we know the next couple of months the market tends to have a bullish bias. So there's a real good chance we're going to have some really good trades on the long side. You might get a short trade valid over here, might be okay, but the best potential going with seasonality on top of our regular trades criteria gives us an advantage on the upside, okay? For bigger profits due to bigger trends. All right, so in a second, for anyone who might have come in late, if anyone came in late, the link is in the chat window for the handouts. So go to that website and you can download the handouts and also historical trade listings. All right, so that all sounds good. Now let me show you. I asked Becky to put together a spreadsheet with trades over the last 4 to 5 years during a certain time period from September through November, because that's a time period that is very profitable to us, and it's a time period which we wait for patiently every year, because that's when we know we're going to get the best trading opportunities. All right, so, and then we'll take a look at one of the strategies we use. Some of you know it, some of you might be new to some of you. I see we got still some new people coming in. I'm going to change the share. And let's see. Let's see, this one it? Yep. Okay. So I asked Becky to put together all the long trades since 2019 and all the short trades from 2019 from mid-September through mid-November. And to be even more exact, it should really be, we made it the 15th of the 15th, but it should really be from the Friday after expiration in September until expiration Friday in November, to be even more specific. So keep that in mind, to be very, very specific. Might tweak a couple of dates here. Won't make any real, it might actually improve the stats, but it's actually from the Monday after expiration Friday in September, which is the third Friday of the month, through expiration Friday in November, which is the third Friday of November. On the long side, over the last couple of years, from 2019 through now, we have 97% winning trades. If you take a look here, we have 256 trades during that time on the long side. 97% of them are winners. Okay, that is a very, very, very disproportionately high win percentage on the long side. This is why we look forward to this time of year for that seasonal pattern. We just wait patiently for our buy signals. Okay. The strategy we'll be looking at today in a little bit is the Donchian cross, but these are all the different strategies we use: the Donchian T lines, buy and sell. Ichimoku, some of you know it, still use it. We make it available to any of our clients that want to use it. It's still out there, still doing well. Okay, so you can see 97% wins on the long side. And anyone who wants this spreadsheet, let me know also. I can send it to you. But it's just a very consistent wins. Doesn't matter what the market's doing. We get these. This is the time of year. Okay. And this is through October of 2023. At least, yeah, through this past week, this is the current status for this year. These are the winning trades up to now. And right now we're at 9. And so from 2019 through now our data doesn't start at 2019. Our data goes back to 1999. Okay. So we have index data from 1999. Some of the ETFs started in 2005, 2006. So we have data from day one that these exist, that most of these existed, and from 1999 for the major ETFs like the Qs, NASDAQ, and S&P. Goes back to 1999. So that's where we have the actual stats from. I just asked Becky to put together this. So anything you see in rectangles, Becky does that. I do not type into little rectangles. Okay, I do not do this. I absolutely hate putting stuff in spreadsheets. And I also I'm not a typist. I hate typing. So Becky handles all the stats. She maintains this daily, weekly, monthly, updates this for all of us, and sends it out, the stats to all the trading clients who I'm coaching, so they can make decisions accordingly. And anyone who wants this listing, once again, message me later on. So just as a comparison, here's a short side. 84, it's still great numbers, but nowhere near the same type of profitability. This is 84% compared to 97%, okay? Like I said, it's still profitable, but nowhere near as profitable as the long side during this time of year, okay? So there's nothing wrong with trading the shorts. But if I have to make a choice between a buy signal during this time or a sell signal, my choice would be a buy signal. If I had a choice between a buy signal or a sell signal at the beginning of September, I would take the sell signal, given the choice. If I can afford both, great, I would do both. But if I have limited funds or I can only allocate so much money to one, I'm going to take certain trades at certain times based upon understanding seasonal patterns. Okay, so still great numbers, but the edge is on the long side for this end of year seasonal pattern. Okay, there's certain stocks we trade at this end of year also. I personally only trade stocks during this time on the upside, only certain stocks. Becky might do certain ones also. I know some people have messaged me about certain particular stocks, but only this time of year is the time to do it because you have the best opportunity for a nice return on your money. Real nice opportunity. Okay, so I'm going to switch back to the chart. I'm going to go over the Donchian cross, which some of you are familiar with who are my coaching clients. Plus, if you've been on this meetup before, then you've seen it before. All right, so new share, SPY daily. Let me pull up, let's use the Dow as an example. Okay, right now, we're all in still bearish mode. Orange line is the Donchian mean line. From Donchian channel, this is the mean line. The blue line is the 40-period moving average. This is the daily chart of the Dow. Okay, daily chart of the Dow. And we have, so what we're looking for is the Donchian mean line to cross over the 40-period simple moving average. That is our setup. Okay, and there's other criteria which we use as we call it a trigger. I still use Jake Bernstein's terminology, setup, trigger, trade management. The setup is visually what you look for. As an example of that, on this day, if I updated my data and I take a look at my charts, do I see the orange line crossing over the blue line? Nope. That means there's no trade here for this strategy. On a day later, did the orange line cross above the blue line? No, I got nothing. Hey, wait a second. The next day, the orange line crossed above the blue line. So now I have a potential trade. Okay. I would go to my trading plan, verify if I'm trading Dow, it's over 84% wins because that's our low end on options. Has to be 84% wins or higher. And we know we're going to come out on top when the year is over usually. Okay. And then I'm going to be, so let's use an example right here as a quick example. Someone pull out a calculator, whether it's Becky or anyone else, please have a calculator. I'm going to make some quick calculations. We're going to keep it really simple. So we got some new people here also. So have something to make a calculation. If you take a look at the chart, you'll see the ATR is 3.89. Excuse me, 3.45. ATR is 3.45. That's the average true range. We do not do option analysis. The analysis is done on the ETF. The analysis is done on the ETF, not on the option. We always trade the first in the money option as it's going to be 1 to 2 months out. First in the money option, and it's going to be 1 to 2 months out depending on the win-loss stats and a business decision you make. The more time you put in to the option, 2 months, the better your results will be overall. Okay, so $3.45 is on average how much it's moving, how much DIA is moving every 3 days. Okay, if we were looking at it on the big full-size Dow, that's basically 300 and something points. The next day, the market opened at 345.35. So here's a calculation. What is 345.35 and add to that 3.45? So $3, so 345.35, again, 345.35, and add to that the ATR from the previous day of 3.45. What's that number? Again, the open this day, 345.35, and add to that 3.45. Need someone to type that in to the chat window. Give me an answer. Don't have a calculator out? Pull out your calculator. Open 345.35 and add to that 3.45. Okay, Mary has it at 348.80. Okay. So what we would do is at the open price this day or any time lower, preferably lower, the lower is better. Whether you're buying call options when the market opens at 345.35, or you're buying it later in the day when it's around 342, which is even better. And it got as low as 342.72. So you can buy your call option first strike in the money, 1 to 2 months out, depending on what the stats show in the data in the trading plan. Or you buy the next day, or the next day, or the next day, or the next day, or any time in the next 3 weeks, you can buy your option. Because the target is going to be 348.80. And it did not reach that target price until this day. This is the day the target got hit. Okay. So as long as you are below this open price on this day, the day after the trade signal was valid, this might be 85% wins on this with this trade signal. On this day, it's still 85% wins. On this day, it's still 85% wins. On this day, it's still 85% wins. The difference is here, your target would have been $3.45. Between here at 345 and here it dropped, let's say it's dropped about 8 points. So instead of your target being 345, getting in down here, your target can now be $11 first target. You buy the first in the money option, and your target is now 11 points rather than 3 points. How much you think your option is going to be worth with an 11-point move in that option? Is going to, at the first target, you're going to get a double or more. Okay. There are people who like to get in right at the open the next day just to get it over with. They just want to get a trade on, it's done, then they go back and live their lives, they put their targets in and everything, the exit orders, and walk away. There are people like me, I don't rush to do that anymore. I did it during COVID because that was my only income during COVID, so I made sure I got into trades. But now, if I see a big move down or a gap down, beautiful, because I know this trade's still on, but now I'm getting in, I could get in here. Instead of having a 3-point target, I might have a 4 or 5-point target. And all of a sudden, where I'd be expected to get a 15, 20 something % return, by getting in a couple days later, I'm now automatically going to get a 45 to 60% return at the first target. Getting a couple days later, I'm now looking at a 70, 80, 90% return or double at the first target, because I'm getting in down here. Okay, I don't really care about time decay and stuff like that with ETFs, because the implied volatility issues that are involved with stocks are not applicable to the ETFs. With stocks, vol crush might kill you, but with the ETFs, it's a non-issue. The movement, the directional movement, we expected the directional movement of the ETF to be sufficient to overcome most of the time decay. Okay, we don't know what the option price will be when it gets there, but in 90-something% of the cases, the option will be worth more than what we paid for it. And it can vary from a 3% return to a 30-something% return to the first target, unless you get in at a better price than expected. Then that 3 to 30 ends up being 25 to 60-something% return to the first target in many cases, depending on when you get in. So there's no big rush. The more patient you are, the more money you're going to make. And this is a setup that happens multiple times. Those of you who trade the strategies already, you know, this is just one of 6 strategies on a daily chart, just one of 6. Crossover, buy your options, cha-ching. Crossover, happen on this day, buy your option, goes against you for a couple of months. That's okay, we have 2 months worth of time, cha-ching. Buy that, this trade's valid here. I could get into this trade anytime during this next month and a half. I could get into this trade here. I could take profit here with, if I want to, because I have flexibility now how big I want to make my target. I can get into this trade down here and take my profits up here. I get into this trade down here, take massive profits up here. I don't have to rush. The more patient you are, the more money you will end up making, especially with options. If you want to rush and get in right at the open, great, then that's what you do. But if you are not, the less you care, the more money you end up making, because you can get in the ones that go against you are the ones that will make you the most money, because you end up getting in at a much better price. So if I see a big down day in the market like this, that's when I'm looking to get into long trades that I might have missed previously for whatever reason. If I see that for this type of gaps, it usually means there's some kind of news in the market that's really pushing markets lower. So that's what I look for. It's like, oh, gap, the news is really bad. And when it gets gapped down for a couple of times, I'm going to go looking for some trades from previously that I may not have been in. Because, and Becky does this all the time, when we get a big down move, let's take a look for some long trades that we might have missed previously for whatever reason and see if we can get into them. The win-loss stats don't change, just the profitability changes. So if it was 80-something% chance of having the first target hit back here, over here it's still 80-something%. Over here is the same 80-something%. Over here is the same 80-something%. Here is the same 80-something%. And we're still below the original entry price. It will still be a better trade because it's cheaper. You're getting in a better price and cha-ching. So this is how we pretty consistently make money with this one strategy. But this trading approach: crossover, buy, good. Crossover, buy, good. Crossover, buy, good. Crossover, buy, good. Crossover, buy, loss. That one's a definite loss. Crossover, buy, good. Crossover, buy, good. Crossover, buy, good within days, with a gap even better. So anyway, this is the Donchian crossover, where we look for the Donchian mean line to cross over the 40 SMA. That's our setup. The trigger is more specific criteria: how many days this orange line has to be below the blue line relative to the closing prices relative to the Bollinger Band, which is the dotted line. So that's all in our trading plans. That's all for one particular strategy out of 6. So between the different strategies, we tend to always have something to trade, but adding seasonality to it is what puts us over the limit. Here is what this was, 2021, when we got our first set of buy signals. Cha-ching. Here with the Donchian cross in 2021 for DIA. And we have the same type of thing for multiple sectors. Let's take a look at XLB, material sector. XLB. is 2020. Here is 2022. We got our buy for the Donchian cross on 11.3. Massive rally. Okay. XLB is one of the ones I always trade also. That's one I really enjoy trading. The pricing is right. Open interest and volume is really good. So it's good for even for smaller accounts or bigger accounts. And you go back each year, you see similar type of patterns. Here is same trade in that October, November timeframe. Plus, this is just one strategy, okay? There are multiple strategies, but the same type of results with what we expect. Right now, we're not there yet. So we're just waiting patiently for the orange line to cross the blue line. If I pull up the NASDAQ, waiting for the orange line to cross the blue line. Okay, just take a couple of good up days. But when that happens is when we get our buy signals, and then it's time cha-ching, time to go. And this is what multiple markets look like right now. And pull up S&P. Same thing. Waiting for the bullish cross, and now first set of buy signals. Now we have different buy signals going on with the market internals, but we're not covering that right now. So we've had market internals trades down here, which have already hit first targets. Market internals usually happen following a bearish move in the market, and then those are usually our absolute first buy signals, but those have already been capitalized on short-term market moves. And so now we're looking for the next set of, from our sixth set of trading signals, our next buy signals, which is going to be this crossing up. So if you have any questions on anything we've done today, but this is the time of year where the buy side, whatever strategies you're trading, the buy side has a definitive advantage, but you can't guess it. You can't just hope for the best, just go long. Timing is everything, because especially with options, because options decay and expire worthless. So you have to have a plan. And if you just buy an option for the heck of it, how do you know what price you're paying is going to be, and how much time you have is going to be good? You don't unless you have a plan. So how we deal with that, we have rules for option pricing and exact amounts of time for the option for different strategies. Okay. And it just works. You can't predict how much you're going to make, but if you're consistent and make some fairly good decisions, and it's good to check with me before you do certain things, then you can actually have a pretty good profitable trading account. And this is the time of year to really capitalize on the long side, but you got to wait for the timing to be right. Right now, the timing isn't right because we're still in bearish mode. Okay. So when this crosses above, that's going to be our buy signal, and that's when we jump on it and we go. And that's going to be one of our first buy signals. We're going to have others going on, but not the first ones. One of the first ones we're going to get will be the Donchian. The earliest ones will probably be the market internals, which will probably happen here somewhere. And then after market internals, then it'll be the Donchian crossover will be next, and the Ichimoku hook will be next after that. So those will be the first two buy signals. And then we just ride those up until the T-lines buy signal, which is more of a trend trade. All right, so I'm going to switch back to the handout, unless we have any questions on this right now on the chart. Anything at all, feel free to ask. You can unmute and ask, or type something in chat window. Okay, we're back on the seasonal composite chart. And like I said, this is the one we're looking to trade right now, and we're just waiting for it. This is the one I do every year, and this is my favorite time to trade. I trade both options and futures. Realistically, the majority of my option trades are done between September and like April timeframe. I trade futures throughout the year, except for December. Just take December off for the futures and your numbers work out much better. But for options, this is the main period I trade for September through April. And that's because of certain predictable trends that I try to capitalize on, where the trade signals in our regular trade signals are 84 to 90-something% wins. But that even goes up another level when we factor in this, okay? All right, so that's when I showed you the list of trades at 80-something, I should be at 97% wins on the long side. That's the difference in profitability. That's why we like this period so much, because it's the time to go long when you get a buy signal. Last year, just to show you real quick, what losses we had this time of year last year. Okay, here is the chart of the trades again. So again, long trades. Here's 2022 trades. One loss in the end of the year. But look at that, just literally 2022 wins. It was ridiculously good. Here was the short side in the 2022. Literally all the losses happened on the short side during that period. So during the short side is when the losses happen, because during this time of year, the advantage is on the long side. You can take these trades, great, and if you're consistent, you're going to make money. Your net, assuming you have enough capital to take long and short trades, you're going to come out okay. But if you using the seasonality, and you may not take as many of the short trades, but take more of the long trades, because you might want to be 50-50 long short. But this time of year, you may want to be more slanted on the long side and less heavy on the short trades. So you don't want to not take the short trades, but maybe take fewer of them. See what I mean? But yeah, last year, most of the losses, basically all of them was on the short side. The long side, beautiful winning trades. That seasonal pattern does count, and it can help you filter a little bit with your decision making and how you want to allocate funds. But this time of year, the bias is upward. Still take a couple of short trades just in case, but the bias is to the upside. All right, so I'm going to go back to the handout again. So we keep on evolving how we are trading, and as people ask me things, how I personally make some decisions, and this is something we've been doing for a long time. I think myself and Becky first started doing seasonal stuff when we were learning with the Optionetics folks way back when. And we had a big Oasis convention, a big trading convention every year in Santa Clara. And here's something we learned about. Hang on a second. I'm going to share the screen with you here. Something that we learned about back then that's good to be aware of. The Stock Traders Almanac. When we started learning about seasonal patterns, it came down to the Stock Traders Almanac, and we know people who basically took information from the Traders Almanac and put it into a more systematic format. So we use a software package where certain scans are built in, or we know where to how to scan for certain seasonal patterns, whether it's the stock market or commodities, oil, gold. And so this is stuff we try to capitalize on. People have asked me what books to buy. This is really the only book I've ever advised anyone to buy, because it's not subjective. It's literally historical data that's been documented and put into a statistical format, and not anybody's opinion. That's why I like this. It's not about someone's opinion. Well, I feel like I want, no, this is up to 100-something years worth of data. You take some of the information here from the Dow, goes back 100 years. And some of our software packages are the same thing. They can go back 100 years worth of data and verify that pattern exists 60, 70, 80% of the time in different markets. But this is the only one I ever recommend for people. It's good to see it because it lets you know different times during the year when certain markets move up, down. And so when you see things happening in the markets, you realize, wow, the markets are doing exactly what statistically is expected. There are no big surprises. I'm never shocked, especially this year. This year, literally, the market has done everything that it's statistically expected to do at a time it's statistically expected to do it. So nothing shocked me this year. It doesn't matter what's going on. Doesn't matter what war's going on or economic upturn, downturn. Doesn't matter what the speaker's doing or there is no speaker. Doesn't matter what anyone's doing. Doesn't matter who's running for president, who's on what country, anything. Doesn't matter. The markets move in a certain predictable way to a certain percentage, and things repeat. And this is a great one to actually use is this. The Stock Traders Almanac. We've been using this information. Now, if you Jake Bernstein's website will actually, Seasonal Trader actually will corroborate what's in the almanac with his data because the numbers just match what is it's just data. So his data actually matches what's in the almanac. That's why I like it, because it's objective information, not someone just deciding in their own minds. No, this is objective information and just put into a format that's all statistics and numbers. So this is the only book I will recommend. It's just good to know in conjunction with our existing strategies. All right. So and while I'm here, contact form on our website. If you want a copy of any of the seasonal charts we have, message me later on with your information and what you need, and I'll get that to you. The valid trades, historical trades we post here. So all the option trades over the last, since 2019 are here. The good, bad, and the ugly, it's all here. So when you look at it, all the stats are there, but the win-loss percentages, everything is there. We don't hide anything. So you know exactly what to expect. Last year, probably the only year that might have been, maybe depending on what choices you make, you might have been break even to a slightly positive on options. Just depending, but the last couple of years have been just awesome, and this year has been also awesome for trading options. Last year was kind of, yeah, it was okay, but not the best. Previous years, beautiful. This year, beautiful. Okay, on my homepage, should also see links to the podcast I did that talks about my trading. I didn't even know what to expect when I was interviewed. They just told me go with the flow, and I didn't know if they're going to try to ambush me or something, but they asked me whatever they asked me, and I just answered it in real time without any, I didn't know what the questions were going to be. I just, okay, let's go, because my life's an open book. I don't hide stuff. So life's an open book. So just ask whatever they asked. I answered. A couple of links to some other videos, the markets we trade. One of the videos on options, and we have ones on futures also. This one's on futures. And this was an example that I was asked to take a look at the big picture. And big picture, this is showing all trades on the NASDAQ in 1 year. It was 90-something% wins when you took all trades. And next presentation I do, we're going to be taking a look at something similar. If we traded all the major markets and nothing else year to year, what would our trading accounts look like? So that's going to be our next presentation, probably in about 3 weeks, maybe. What if we focus just the major markets and nothing else, and just traded like this, where we're taking the full package, which is the weekly charts, daily charts, and market internal strategies, and we trade them dedicatedly. If the trade's valid, we take the trade. We're going to take a look at how things would have played out over the last several years versus picking and choosing out of 20-something ETFs and sectors. If we just focus on the major markets, and it'll be quite interesting to see the results. I already know the results because I have the stats, thanks to Becky. But that'll be the next presentation. So stay tuned for that in a couple of weeks. I'm gonna go back to handout. Okay. If anyone is interested in working with me, this is probably, there is no real better time. This is the time to get ready now for all the 6 strategies for the daily chart program, starting with the Danshin cross and go from there. And that would be the first thing we look at because it's the first thing that's coming up, that and the Ichimoku strategy. Those are the first buy signals we're going to get. The Danshin and Ichimoku will be the first buy signals we get. So we want to be ready for those. So good opportunity to gear up now. Everything I do is one-on-one. I do not do group training. I don't lecture. Here I'm lecturing because it's just one-sided. But for when I'm working one-on-one, I guide you. I make you work. I will make you do calculations and figure stuff out. I will point you. I want to make sure you understand it. And then we just keep building on that. However many, you have to commit 6 to 9 months of trading the strategies to fully understand it. Because at some point in time, you'll have your first set of losses and you start freaking out and then you stop. Losses happen. But you have to trade through 6 to 9 months consistently, following the plan. Don't change the rules. Don't panic and do something else that you don't tell me about. You keep consistently following the rules of trading the way we show it, and you will see the results. But we all have to get through those periods when we get some losses and then we want to change stuff, but you can't, because this stuff works. The only way to make it work is to deal with the losses and feel it and then come out the other side. And then after 6 to 9 months, you're like, wow, I had all these months of wins and I lost all this money, and then I made it all back. And then when the year is over, wow, I came out on top. That's trading. It's not about what's right in front of your face right here and now, or how you did this week or this month. It's how you did after 6 to 9 to 12 months of trading. At the end of the year, did you make money or not? Okay. And then we look at how can we make more? How could we have improved on this? Like the same way I showed you in the chart, getting in at a better price. That can literally double your income for the year by waiting 2 days to place one trade. Getting in at people who get in right at the open will not make as much money as people who might wait a day or two and get in at a better price, because that same trade, the person who waited a day or two is going to probably get in, will probably make twice as much as the person who got in right away. So patience in trading these strategies is key, but we try to adapt it to your personality and lifestyle. When I say lifestyle, not everyone can be up in the morning. It's when the market opens and trades. Not everyone can be there every day. So, but the way we do it, like I showed you, you could have taken this trade a day later, 2 weeks later, 3 weeks later, 4 weeks later. That is what you got to do. You get in when you can get in, and you make use of the situation you're at. And actually, like I said, the more patient you are, whether intentionally or by accident, the more money you end up making. I charge $17.50 for the options coaching program. If you let me know before the week is over, I'll take $100 off of this, but it'll be $16.50. Everything one-on-one. I'll meet with you either on Zoom or in person if you are available in the South Bay. I'm in Santa Clara. If you're available to come to Santa Clara, I will meet with you one-on-one. We can do all these strategies on either NinjaTrader, which is free, or using the Thinkorswim platform, or TD Ameritrade Thinkorswim platform. Either one is fine for these strategies. Okay. And like I said, all one-on-one. And if you want the full program, which includes the weekly chart and market internals and a daily chart strategy, $39.95. If you let me know before this week is over, then I'll take $500 off this price. So it'll be 34.95, I believe. And it does take longer to implement, but you'll have everything at your disposal. And then you can trade what you want to trade, whether you want to do the daily or the weekly or internals, trade them all. But like I said, it's consistency. And this is what I'm going to be going over the next meeting. When we trade everything, what do your accounts look like if you trade everything? And you just like, wow, okay. You don't realize it until you look at it laid out on a spreadsheet. Okay, so once again, this will take a little bit more than a couple of months to implement, but you got to do it all. You have to learn the strategies. Once you start, the trade management is always all the same. Just have to learn the different strategies, the nuances, small changes, but it's not a big deal. But once you get it down, it's down. And each day I will email out to you what trades are valid. So you're not alone having to go through and review all these 20-something ETFs. I do that for you. I personally do the review each day for the futures, and Becky does the review each day for the ETFs and options. So when she sends me the options, what she found valid, I forward those to the people in my group. So you get those in the evening usually, and you can compare it to what you found valid. And then you place your trades at your leisure, whether the next day or a day after that or a week after that or whatever you want. But if you need help, I will literally handhold you. I'll be online with you via Zoom as you're placing your trade, making sure you have the form filled out correctly. One of the hardest things, if you're new to this, is to get the form filled out right. Okay, so I will help you with all of that as needed and make sure you're getting it right. But I do everything one-on-one for that reason. There's some things that sound simple, but I might have to explain it to you 3 or 4 different ways so that you understand it, because how someone else might get it like that, if I use the same words with someone else, they may not fully understand it. I've changed the words, twist it up a little bit, and or show something in a different way so that you get it, okay? As I've been finding out recently, some people who I thought had known certain things, they had gotten it kind of a little bit off a bit, and it was messing them up, because you have to communicate with me. When something doesn't seem right, that's why I want to go through trades with you once a month. Show me the trades you placed. Show me your wins and losses. Let's make sure you're doing everything right. Even though you might think you're doing it right, you might have been getting lucky, and we can't rely on luck, okay? Because there's too much money involved here. There's a fine line between making money and not making money in trading. So the more I know what you're doing, we can correct little things. One person recently, they waited 6 months, 6 or more months before going over stuff with me. And in that 6 months, they thought they were doing something appropriate by changing everything following some losses. And that just messed them up even more, because that's when I need to talk to them to say, don't change anything. Keep doing it. Trust the process. The numbers will work themselves out. And if they'd just done that, they would have been like, wow. Okay, but you can't change stuff, but your mind will want you to change things because you had a couple of losses, and your head will mess with you. That's where I step in and try to get you back mentally on follow the plan. The plan works. Do what I tell you to do consistently. If you have a small account, you do not have the same advantages and opportunities as someone with a big account. It's easier to make money if you have more money. Okay, but if you have a smaller account, then you're gonna really need to fine tune what you do, and you might need help doing that. That's where I'll step in and help you fine tune things, because bigger account is more flexibility. You can trade whatever you want when you want, and the numbers will work themselves out. Smaller accounts, you have to pick and choose. So there are ways to pick and choose, but it's always more challenging with a smaller account. But that's where I come in helping you, and then we do the best we can. All right, so if we don't have any questions, I'm going to call it for now until our next meetup, which will be in about 2 to 3 weeks. It'll be probably the weekend before Thanksgiving, and that will probably be our last meetup for the year, unless some people really want to do something in December. But that'll probably be our last meetup. It'll be on options. If you want to work with me, email me, message me before this week is over. Like I said, $1,650. I'll take $100 off this price. Although it says there's a time of 3 to 6 months here. I don't put any real time limits how much to work with you. I just need you to commit. People who I've been working with for years, they still email me every week to verify their trades, ask questions. If they want to meet, I meet. Not a big deal, but you have to commit on your end to that 6 to 9 months to see this work. And that is what works, 6 to 9 months of trading the strategies consistently, and you will see the results. So if you're interested in that, or the full program, which is basically everything. The full program has all the daily chart strategies, weekly chart strategies, plus the market internals, which is focusing on just the Dow, NASDAQ, and S&P. All right, so unless we have any questions, I'm going to sign off for now, and then we'll resume in 2 weeks or 3 weeks, just before Thanksgiving. All right, see y'all later then.